In 2025, inflation continues to erode the value of your cash, meaning that money left sitting in a savings account buys less with each passing year. For example, $100 in 2020 is now only worth about $80 in today's dollars. That's why simply saving isn't enough to preserve your purchasing power. Fortunately, you don't need thousands of dollars to get started. Investing with just $100 is not only possible, but also a smart move. By harnessing the power of compound interest, even small investments can grow significantly over time, making early action one of the most effective steps toward building lasting wealth. Before you can start investing, you need a secure place to hold your assets. The two most common options are a taxable brokerage account and a Roth IRA. While a brokerage account offers flexibility and easy access to your funds, a Roth IRA stands out for its tax-free growth potential. Contributions to a Roth IRA are made with after-tax dollars, and qualified withdrawals in retirement are completely tax-free. For beginners who want to maximize long-term gains and minimize future tax burdens, a Roth IRA is often an excellent starting point. Fractional shares have revolutionized the way beginners can invest in the stock market. Instead of needing hundreds or even thousands of dollars to buy a single share of high-priced companies like Amazon or Tesla, you can now purchase just a portion of a share with as little as $1. This means that even with a modest starting amount, you can gain exposure to some of the world's leading businesses. By breaking down the cost barrier, fractional shares make investing more inclusive and accessible for everyone. It's a practical way to start building a diversified portfolio, regardless of your budget. Index funds and ETFs offer investors a simple yet powerful way to achieve diversification. By pooling together hundreds or even thousands of stocks, these funds spread your investment across a wide range of companies and industries, reducing the risk associated with picking individual stocks. For example, the Vanguard S&P 500 ETF, known as VOO, tracks the performance of the 500 largest U.S. companies, while the Vanguard Total Stock Market ETF, or VTY, covers nearly the entire U.S. stock market. This broad market exposure helps cushion your portfolio against the ups and downs of any single company. Ultimately, investing in index funds and ETFs is a practical strategy to minimize risk and build long-term wealth. With just $100, you can start building a solid investment foundation. One practical approach is to allocate $80 into a broad market ETF like the Vanguard S&P 500 ETF, which offers stability and exposure to the overall market. The remaining $20 could be directed toward a sector-specific ETF, such as technology or healthcare, to tap into potential growth areas. Alternatively, you might choose to keep things simple by investing the entire $100 in a diversified fund. Remember, the most important factor isn't the amount you start with, but the habit of investing consistently over time. Taking the first step toward financial independence starts with action, not the size of your initial investment. Whether you begin with $100 or even less, what matters most is building the habit of investing and letting time work in your favor. Consistent investing, even in small amounts, can lead to significant growth thanks to the power of compounding. Remember, long-term growth is achieved by staying committed and patient, not by chasing quick wins. Start your journey today and give your future self the gift of financial security.